Welcome to the chair. Today is Monday the 13th of January 2025 and now, as I promised you last time in episode 8, we were going to go to look at the China-ASEAN relationship and also the RCEP, but due to events, I think what we're going to do is have a quick look at G7 countries and changes of leadership and how that's happened. And how that's been a ripple effect caused by decisions mostly made in Washington, which of course tells us that the United States is not completely powerless yet. In fact, the United States is still, I suppose, the richest and the most powerful country on earth, although there are deep structural weaknesses that we can see. We're witnessing debt, interest rates, and the effect that those interest rates want to have on all the emerging economies across the world, but also, more specifically, the impact of US policies. Let's start, of course, with Ukraine and sanctions. Biden administration in the last few days, before he has to hand over power on the 20th to Donald Trump and his administration, is trying everything they can to trap the new incoming administration, the Trump administration, into policies that are set by Biden and the neocons, clearly Blinken and Kagan and Newland and all those people. One might believe that Donald Trump also believes in competition more, so intense trade rivalry, than he does in wars, and I think this is fairly obvious. He's definitely working to towards a summit with Putin that was announced a couple of days ago. I think this shows that Donald Trump is not dominated by his staff. He might have had that occurrence during his first term when he really wasn't sure what was going to happen, and he's probably quite surprised that he won, although I wasn't. And so what happened, of course, is that now, 4 years later, after all of the troubles that everybody's given him, Biden administration, and all the legal cases and all the financial trouble that he's had to go through, so all of that has taught him how to approach these things, and he's improved enormously. He's more thoughtful these days than he was. He doesn't speak off the cuff so rapidly anymore, and he's really out to achieve certain goals. And one of those goals, of course, is to make America great again. Now, but in the doing so, what Biden's done with the Ukraine and with Gaza has weakened the Europeans terribly, clearly because of energy. It costs twice as much to make a car in Germany as it does in China. So, one can see that the cost base for China and its complete supply chains and the export of electric vehicles has been so important. But also its energy supplies from Russia, which are very, very cheap, and this is true for India as well, and even for the whole global south, really. If they're getting Russian oil, they're getting it cheap, and so their inputs are cheap. But for Europe, their inputs have gone up enormously, and America still has very cheap energy. So, but wages and so forth, and the cost of transport and other things, it's still too expensive, and salaries, of course, it's still too expensive to make cars in the US. But I'm digressing. So what I want to get back to here is why Europe got into trouble, and Europe got into trouble because of the Biden policies. They could have avoided the Ukraine war, but they didn't. They went looking for it. They got it, and now that things have gone badly, and Trump's going to have to rein it in, and he said so. He's going to take 6 months into 2025 at least to unravel this problem. But look, they're talking. Trump's going to talk to Putin after the 20th, not before the inauguration, because it needs to be head of state. So that's why I think that's happening, and it gives him a little bit more time to put things into place, but definitely that's where it's going. So now, what has been the outcome? Well, the outcome, and I wanted to talk to you about toppling leaders across the G7. So, let's just think we just had a replacement for the long-standing liberals in Japan. So basically, very, very weak leadership coming from Japan. And so then the same thing has happened in Germany, the same thing has happened in the UK. How many prime ministers have there been in the last 3 or 4 years? So you just need to look at that. Boris Johnson, of course, being the most recent victim. And Starmer, I think, has not proved to be able to live up to his promise. He's gone straight into the whole Ukraine thing, and And look, the UK economy is in a mess, there's no doubt about that. I mean, there's some bright points. You know, they're building infrastructure in relation to transport, like one high-speed rail line, which is not very impressive really, but look, they're building it. But you know, we're talking about switching governments here all the time, and Starmer's going to be, he's under fire already. Elon Musk has come out and made statements about him. It's very, very strange even that Elon Musk now has also got a preferred government in Germany. Now in Germany, we're looking at the AfD possibly having the upper hand. Now all the other parties are going to combine to keep the AfD the far right, but it tells you what the sentiment amongst the people and the population is. And so the same is true in France with Marine Le Pen. Macron has had to create coalitions of any kind to not allow them to allow the far right in France to take government. So you can see here, Germany, disrupted, election coming up, Japan, weak leadership, the UK, weak leadership, and still, talking war. And Macron as well, talking war, wants to send troops to Syria. Look, there's something very strange about all of that. Macron's a lame duck as well. He's been a lame duck basically since the election that happened just after the submarine deal with Australia was cancelled, and then he lost. He won the election as president, but he didn't win the legislative, and so that weakened him, and that was a direct result of that switch on submarines. So they lost that contract, which was worth about $60 billion US, and so a lot of jobs gone, and so that looked very bad for Macron. He's clearly been not been able to function. He has just made an enormous amount of statements about Ukraine sending troops, French troops. They're not there, but they were there. Some of them were killed in an attack last year. UK has had special air service officers, soldiers in the Ukraine. This has been well documented. And then in the meantime, France is being booted out of North Africa across the Sahel. So that also has injured the economy of not just France, but of Europe. And so Germany, of course, so that ties to the EV intro that I talked about. 4 of the big partners for the US in NATO are in real economic doldrums. Look, there's going to be the German election. Who knows if Scholz can win, but the AfD is going to have a big showing, and it's going to be very hard to look at how that's going to work, and they want to have a good relationship with Russia. Whether that's going to have an impact on relationship with China, I'm not really sure at this point, but it's clear that the Chinese economy is still driving the global economy, global growth at 5% in China. They've met their targets. And it looks like they'll make their targets for 2025 as well, even under all the pressure that sanctions, Biden's just put in a whole lot of new sanctions, 120 sanctions, we're talking about military blacklists, but Tencent has nothing to do with that, neither is CATL, it's the world's largest battery manufacturer. So this is really just hiding commercial attacks. Attacks on any Chinese company. Tencent is a giant. It's the largest online games company in the world, and obviously it owns WeChat and all sorts of WePay, and it's a huge communications and media company. What these Biden sanctions do this time around is they're not going to directly affect those 2 companies and many of the others. What they're going to do is stop capital from the New York Stock Exchange and obviously from Europe also entering into Chinese markets. That's the direct effect, and we saw that the Chinese stock market fell. I think they'll recover, and as long as the emerging economies in the global south keeps growing, which they are, here in Cambodia we're at 5.5, trending towards 6, and I think this is true in Malaysia and Indonesia and so forth. So in ASEAN, Central Asia's booming, Africa's doing very well, at least above 3% growth in many African countries. And some of them are really outstanding. Ethiopia, Tanzania have been doing very well. That's all to be very, very useful through the Belt and Road. It's going to help China's economy. It's going to help the global South economy, all of the emerging economies. So interest rates are really critical in this. But that's why everybody wants to switch out of dollar. If they can do local currency exchanges, they avoid that problem. And this is only going to accelerate that. So it can't be good for the United States, although it's definitely not working for Europe. I think Europe's going to have to eventually sort of call it quits and make serious negotiations with China. And if the Ukraine conflict can be dialed down with the Donald Trump and Putin summit, well, then I think that door to China might be just slightly opened a little bit for Europe, and that's where they should go. That makes sense. In the meantime, Central Europe, so Slovakia specifically and Hungary, are very, very upset about what's happening in Ukraine because they don't want to see another conflict occurring in EU countries over the western part of the Ukraine. Central Europe is also very important, and Central Europe, of course, still has those open trading networks with the Belt and Road and with China, which is very important to their economies, and they're building a base for construction, the manufacturing of cars and components and white goods and everything else. But these are Chinese factories being set up in Europe, in those Central European countries. How else are they going to revitalize their economies unless they get new manufacturing and technology transfer for EVs, for example, and battery storage, new energy, solar? It's really the only way. If they want to develop their own and then get into manufacturing, they're not going to be able to compete at cost, at price. The better way to go, of course, is joint ventures with the Chinese companies that build them in Europe. And look, Trump has said himself that, well, Chinese car companies could go to the US, but the problem is they won't be able to do it cheaply. Even, to take off the tariffs, it's still going to be much more expensive to build these cars in Europe and in America. So it's got to be done with very low tariffs, no sanctions, low tariffs, low taxes. So let's look where else. Austria has also had a change of government, and I think these changes of government. Korea, look at Korea. What a disaster! I mean, what a farce! It's just shows you how far you have to scrape, not very far, skin deep, and you find what was lying underneath, and that is. And we can see that weakness and the fact that it was a military dictatorship. So Taiwan and Korea were military dictatorships up until the 1990s, and Bill Clinton, he said, okay, we have to change that. But look what happened to Yugoslavia, and that's the precursor for Ukraine, actually. So you can see that this is over time, this is what's going on. And so this Korean fiasco with Yoon and American Pie shows us just how shallow democratic culture is in these countries. And I think this holds true to Taiwan, it holds true to South Korea. The political elites, so for example, Germany and France and the UK, are blocking anybody else who has a different point of view, and that's of course the far right at the most. But if they can block the left, they'll do it, but they're having to make deals with the left to block the right. It's going to have a very significant effect on unity in Europe, on the euro, and of course on future relations and trade with Central Europe and with Russia and with China. Now, can the US really take on the whole world as Kishore Mahbubani has intimated or suggested? And the answer is no, it can't. It can't. And even if it does re-industrialize and it can produce enough batteries for its own market or enough chips for its own requirements in relation to the transition into AI and huge data centers to run all of this, humanoid robots, all sorts of robotics, Wi-Fi 6, Wi-Fi 7 in factories, all that sort of thing. I mean, it can't be done anymore without patents that are owned by Chinese, for example, and other countries, Japan, Korea, they have patents too, Germany. But who are they going to export to? Because their costs are going to be so much higher, and they have labor problems already. So much of the global market in chips is basically legacy chips, older chips. It's not these really cutting edge chips that are used in guidance systems, computers, AI, and so forth. It's not that. So look, China's going to get there, or already is there, and dominates that legacy chip market now anyway. And they're going to take more of that. Yeah, sure, perhaps it can be slowed down, but we've got to always think about the cost. And China has got a clear advantage on all of this, and it's not going to take too much longer for them to break this. So it's not good for the Americans And so Donald Trump's kind of 19th century idea of sanctions that will, McKinley at the end of the 19th century brought in, and he was assassinated. I'm not mentioning that there's any connection to Trump in the assassination at all. But clearly, who are they going to export these to? So like they're going to, like exporting energy to Europe, it's going to be 3 times, 4 times the price of everybody else? Well, no. And then all of the chips that are in everything that you use, from white goods to your car to whatever it is, it's got chips in it. And in the latest computers and everything else. And then we can see that there's operating systems now. China has Harmony OS operating system, which is a lot better than Android. I've used it. I'm running it on a Huawei pad right now, and it works it's just wonderful. You'll see that all the big names are actually, and when I say the big names, I mean in the tech sector, they're all heading to having their own operating systems in real terms. I think Amazon, Facebook, Tesla, BYD, Neo, Leap, all these companies, Geely, these really big companies are going to have their own operating systems, and they're going to have to work within other operating systems. And so the best way to go here is, I think, the Harmony OS model that Huawei's come out with, which will link across to any kind of a device, no matter what it's running. You've got to be thinking about data that's coming from vehicles, millions and millions of vehicles, and that data, of course, has a national security problem, and so you're going to see nationalism about that. I think the United States is in an extraordinarily difficult situation, because not only are they challenged on the technology and manufacturing front, I mean, not even challenged anymore. China is so clearly far ahead in manufacturing of anything that really matters, that people really use. You can concentrate on chips if you like, but that's really at the very, very high end. And look, there's no doubt that China's going to get there very, very quickly. We're talking 12 months here to 18 months, I think, before they crack that. So, this is the wrong way to go about it. It's not going to work in the long run. I think it's not going to work in the medium run. It's going to be a huge mess for the Trump presidency for 4 years. But it's not suddenly going to turn into a gold mine for the Americans. I think that's not going to happen. The weakening of Europe, the fracturing of Europe, fragmentation of Europe, it bodes very, very badly for the euro currency and for the eurozone. And it can only strengthen China and make the yuan even more tradable, because the yen in Japan also, look at the problems that Japan has. I mean, at that 250% debt to GDP, I mean, that's just how it's still operating. I have no idea, but Toyota and the automotive sector is such a large portion of the Japanese economy, maybe something between 30 to 40% of upstream, downstream is connected to the automobile sector, and Germany is the same. So China's still building new factories. So perhaps more than 60% of all electric vehicles in the world will be produced in China, maybe even higher than that, by next year. And it's already far ahead of Japan already. And now the majority of those vehicles are still ICE vehicles. They are not new energy vehicles, actually. And they're the joint venture products. So those are the joint ventures with the European brands and American brands, and they're shipping those, for example, to Mexico. And then, so you've got General Motors making cars in China and then exporting them to Mexico. So Toyota's doing the same thing, making Toyotas in China and then selling them in Thailand, for example, or making Toyotas in Thailand and selling them to Cambodia. So China's got a huge advantage here, and this is a case of where, and I remember I talked about standards last week, but this is a case where you can definitely see that it's China that is setting all the standards for cars now. So that is going to have a flow-on effect into the software, into the tires, into the glass, into the functionality, the design, everything is going to be driven out of China. And so what's going to happen in the other markets is they're going to start following those standards, just like everybody followed the US standards after World War II, and then they followed European standards, with the Mercedes and so forth, and BMW, and they followed those standards. But there is no car industry in Australia, so they're reliant on China's exports of EVs, and the market's not big enough to be setting up anything other than a general assembly, but not manufacture. and there's an election coming up in Australia in May, Albanese has a very good chance of regaining power, the Labor Party, because their policies are economically sounder. I think the Liberals would just, take directions from Washington as they did previously, and put themselves in all sorts of a muddle with, then they couldn't sell their wine and their beef and the wheat and so forth to China. It proved to be very, very difficult for them. Look, Australia is trying to diversify its economy, yes, but look, things are made in China, high quality, low cost. Where else are you going to go? And that's the biggest market for Australia for its commodities: iron ore, copper, etc., gas, liquefied petroleum. So that's all going to still go to China, and they need that, because if they want any of these countries that I've mentioned, if they want to achieve their economic growth goals, they're going to have to trade with the parts of the world that have the best, the largest economic growth, and that means it's going to be centered in China and in Asia, and then into South America and Africa. I mean, that's the way it has to go. And so, trading with the US is not going to make them rich. And we can see that because they're paying so much for their petrol, their oil. And we can see deindustrialization, where the capital flight is going to the US to build factories there because the energy is so much cheaper. But it's still more expensive than producing in Asia. So you can see that there's a lot of companies, actually American and European companies, who are setting up shop with Chinese partners, but in third locations. So Mexico's clearly one, Canada was one, Australia, but clearly ASEAN is the one we're looking at. Cambodia, Malaysia, Indonesia, Vietnam. Vietnam seems to ring a bell with most Americans, but has huge exports into the US. But I think Donald Trump is going to have a look at that as well, and try and figure out whether the geopolitical pressure that supporting Vietnam to this extent has on China, is that really worthwhile? And can the US continue to subsidize, in real terms, the growth of Vietnam? I think there's problems there, and the canal that's being built in Cambodia is another, that's going to slightly reduce Vietnam's trade figures. Vietnam's had a very good ride for the last 10 years. I think this is going to change slightly as we come into 2025, 2026. I'm involved with negotiations to get manufacturing into Cambodia, but I can tell you that that's very, very difficult. People say they're worried about corruption, they're worried about all sorts of things, but they're worried about what the Americans might sanction in Cambodia. So they're still kind of looking at Thailand and Vietnam, but really at this point, I think there's very, very little difference, and Cambodia is still going to be cheaper. And the new infrastructure in this country is also going to make a big difference. See, American companies are doing that too, but not to the same level and scale that Japanese, Koreans and Chinese are, so East Asia, investing into Southeast Asia. But China is far and away the greatest. If you look at just investment terms into Southeast Asia, I mean, sure, the Americans are still very high up in that, but that money is going through Singapore, and then it's going out from Singapore. So it appears, for example, in Cambodia that it's Singapore investment and looks really high, but there's actually American money in there, Australian money and other money, but Chinese money, any kind of money really. And perhaps that's the way that needs to be looked at more carefully, is just thinking about, it's investment, and it can be put into vehicles that protect everybody from sanctions and tariffs. And so that I think there's a real move there for anybody who can pave a pathway for manufacturers and producers to be able to set up factories in third parties, to be able to navigate this next 4 years of intense commercial rivalry, because that's what we're going to get. Now, I do think that the military-industrial side is going to change slightly. Look, there may be increases in defense expenditure, and that might drive the economy for the Europeans and for the Americans slightly. But still, it's non-productive assets. So they're in huge amounts of debt. They need to re-industrialize. They're going to use their military to be able to try and do that. But it doesn't actually replace Mercedes family cars or VWs in terms of export. And so, you know, Germany exports 75% of its cars. So you can see the real problem is that you're getting the double whammy now. You're getting the political side from the right, real pressure, the war in Ukraine, in immigration, and of course, the war in Ukraine, you know, you can see that huge numbers of Ukrainians are right across Europe, but also, you know, ongoing conflict in the Middle East, not like before when, you know, you had all of those people flowing out of Syria, flowing out of Iraq, flowing out of Libya, etc., etc. That's definitely slowed down, but it's still going to keep going, but not to the extent that it was before. Emerging economies are going to start keeping people longer because their standards of living are increasing, so that will change immigration. And of course, the labour markets in Germany and France and the UK, they're going to just have to start doing the jobs they didn't want to do, and they're going to have to change their education systems to make up for it. They can't just keep poaching doctors from India, nurses from Ireland, and so forth and so on, and from the Philippines, and carers and all of those sorts of jobs. Those are going to change. I think those labour markets are going to have to be readjusted, and there's going to be an implication for that of Trump's policies. So look, that's a short, sweet one today. Let's call it quits. I hope you enjoyed episode number 9, and I'll come back to you very, very soon with episode 10. I am improving everything as we go, so down below there'll be links to all of the Patreon and all of those sorts of things, and where you can see us on YouTube, where you can see us on Substack, Twitter, and etc. all below. Please subscribe and like, that would be appreciated. That can keep this thing going, and looking forward to seeing you next time. Goodbye.